Big news is coming out of the United Kingdom, and it's much bigger than most people realize. The UK just took a decisive step toward integrating blockchain into its financial system. At the center of it is Ripple. The Financial Conduct Authority has approved Ripple to scale its payments business in the UK. Ripple Markets UK is registered and authorized under the UK's crypto asset and e-money frameworks. This is not a pilot, it's formal regulatory approval in a top global financial hub. That green light lets Ripple offer regulated payment services in the UK. It also enables supervised e-money activity under FCA oversight, and it fits a bigger picture now unfolding in Britain. Regulatory clarity is what unlocks institutional adoption. Banks and payment providers do not move until the rules are clear. In the UK, those rules are becoming crystal clear. Ripple's approval signals strong controls in AML and consumer protection. This moves blockchain from the fringe to the financial core. Ripple can now integrate licensed end-to-end cross-border payment infrastructure. Ripple handles blockchain complexity, liquidity, and operations so firms don't rebuild from scratch. E-money permissions open doors to compliant digital fiat rails and enterprise settlement systems. XRP functions as a bridge asset for real-time, low-cost value transfer. In one of the world's largest FX markets, that matters. Ripple embedded in the UK since 2016, investing in talent and compliance. Where regulation is clear, adoption follows, and Ripple is already inside the gates. To grasp the weight of this, understand the FCA. It is one of the most rigorous regulators in the world, not easy to please, not easy to pass. The journey to registration and authorization is demanding. They scrutinize the model, the balance sheet, the controls. They test security and operational resilience. They probe systems to prevent money laundering and illicit finance. This is not box ticking. It is exhaustive. Nearly 90% of crypto firms fail or withdraw. That number shows how tough the bar is. Ripple cleared this gauntlet. It sets them apart with institutional-grade compliance. This is more than a license. It is a credential in London. Being regulated there carries immense weight. It reassures banks, payment providers, and corporates. It contrasts with the broader unregulated crypto noise. For risk-averse institutions, this is de-risking. Think of it like a top hygiene rating before a big event. Institutions choose the partner with proven standards. Ripple earned that confidence, and it will shape what comes next. Ripple's approval sits inside a national plan. The UK is rolling out a comprehensive crypto regime. HMT published final draft text to bring crypto under financial services law. Parliamentary approval is expected in 2026. The full regime goes live October 25, 2027. Consultations span stablecoins, custody, conduct, markets, and platforms. Licensing opens September 2026 with a defined deadline. Old registrations will not automatically convert to authorizations. Everyone must apply anew, under tougher standards. The UK integrates crypto into existing law, not a standalone rulebook. This gives flexibility to craft specific rules as tech evolves. Ripple holds e-money authorization and money laundering registration. They can issue electronic money and provide regulated payment services, core rail, institutional cross-border payments and settlement. But scope is limited. This is not a full banking license. Ripple cannot operate crypto ATMs or serve retail without further approvals. No designating agents or issuing e-money to individuals, small businesses, or charities yet. This is a focused institutional permission set. It lays a solid, compliant foundation to scale as rules mature. For now, Ripple has what it needs to execute in a premier market. XRP is built for utility and payments. It bridges currencies to move value fast and cheaply. Legacy correspondent banking is slow and capital-intensive. Capital sits idle in Nostro and Vostro accounts. Convert to XRP, transfer in seconds, convert out on arrival. Speed, tiny fees, and on-demand liquidity. Institutions integrate Ripple tech without building blockchains. FCA approval lowers adoption friction in the UK. Institutions run on trust, predictability, and law. They manage trillions and avoid gray areas. Clear rules unlock action. This is the signal: compliant, safe, regulated usage of digital assets. The question becomes how to deploy, not whether to try. Pilots, partnerships, and C-suite adoption discussions follow. UK integrates crypto into existing financial law. Familiar rules reduce risk and the learning curve. The current cross-border system is old, slow, and costly. Ripple rails promise speed, lower costs, and efficiency. Regulatory fog is lifting in Britain. Those who move first can gain real competitive advantages. This UK success is part of a global strategy: engage regulators, meet local rules, earn licenses. A landmark US court ruling in August 2025 provided key clarity. Ripple now holds more than 50 US money transmitter licenses, licensed by Dubai's DFSA to operate in the DIFC. Major payments institution license from Singapore's MAS. A network of regulated payment corridors is taking shape. Regulated at both ends increases comfort and adoption. XRP barely moved on the news. That's okay. This is about building infrastructure, not one-day pops. New rails take planning, permits, and construction. When on-ramps open, value flows at scale. The UK processes roughly $5 trillion a day in FX. Even a small slice is a big deal for real usage. Most value still rides legacy rails. That's changing. FCA approval is a foundational piece of the new system. This is regulation paving the way for reality, faster, cheaper, more efficient cross-border payments. Thanks for watching. Please like, comment, and subscribe to Express Econ Geofinance Insights for more insights.